It's very difficult to defy the Wall Street playbook. I tell you that all the time. I mean, what do I mean? Last year, the utilities performed pretty darn well. Even as these are exactly the kind of high-yielding dividend stocks you're supposed to sell when the Federal Reserve is raising interest rates. That's the playbook, and the playbook says it's time for the utilities to go down, especially with the 10-year Treasury yield up to 2.7%. That's a level not seen in 3 years. Take American Electric Power, AEP. It's a company that owns the largest power transmission network in the U.S., along with some major power generation assets. Last week, AEP reported a strong top line, good bottom line. And I got to tell you, it doesn't matter. Why? Because it only yields 3.65%. American Electric Power now remains down $10 from its highs late last year. So should you view this rotation out of the utilities as a buying opportunity, or is it too soon? Let's take a closer look with Nick Akins. He's the chairman, president, and CEO of American Electric Power. Get a better sense of how this company's doing and where it's headed. Mr. Akins, welcome back to Mad Money.
Good to be back with you, Jim.
All right, Nick, why is this quarter like the Beatles tax man?
Yeah, so the quarter went great. We reported we beat the earnings expectations for the quarter. Load is moving back up. Things are looking great. We continue according to plan. But as you know, the sector is down considerably. But we want to make sure that AEP is positioned as part of that portfolio that you want to keep.
Now, one of the things I think that people have to understand is you're going to get some money, a better return with the new tax regime. But you cite in your call that you're thinking about the ratepayers and how to benefit them.
That's right. In our business, the regulated utilities, our taxes are a pass-through to customers. So to the extent there's tax reform, which there has been, the tax rates get lowered. That gets reflected through customer rates, and our customers will benefit from that, and will benefit by the expansion and growth associated with it.
Well, as it is, you've got some terrific industrial growth figures within your area, don't you?
That's right. Our industrials last quarter grew 5.6%. And actually, for the first time, we're seeing across the board, the industrials continue to grow. Our top 5 grew 11%, which was led by primary metals and by chemical manufacturing. So off to a great start for the year.
Now, you put a number out of how many people have been hired in the area. I just think you should talk about that because it's pretty impressive.
Yeah, there has been substantial growth. Matter of fact, our GDP in the areas that we serve are exceeding the national average, and we certainly are very benefited by the number of customer counts and the people moving in. For the first time in many quarters, our residential sectors have increased, so that's a great outcome for the company.
But you are really a pretty much a depiction of America, because that retail sector really getting hurt.
Yeah, the retail sector is down. That's the one portion that's down. Those jobs continue to. The big box stores obviously are impacted by what's going on in the economy, and certainly we're seeing the effect of that. While the industrial and manufacturing continue to improve in residential, it's those retail sectors that are getting hit.
Right now, you've got a huge project. This wind catcher is probably one of the biggest engineering construction projects in the country. I was on the GE conference call last week. There is a bit of a collapse in the price of windmills. Are you able to benefit from that? Are you locked in?
Yeah, we can benefit from that. Obviously, there's a whole nother realm of discussion going on post-tax reform and in terms of the resources themselves to accommodate this project. It's a $4.5 billion capital investment, largest solar farm, largest wind farm in the country in western Oklahoma, and it certainly provides benefits to our customers across the board. There is no doubt that this project will be beneficial across the board from not only industrial and manufacturing, but also other customers in that 4-state region that's being served.
Where are we in terms of competition, the price of wind versus, say, coal and versus natural gas?
Yeah, so when you look at the price of wind compared to coal and natural gas, it's still much more beneficial from an energy standpoint. If you look at it, it's providing energy relative to capacity, which meets the demand. Natural gas and coal-fired generation certainly will solve that part of the picture. But when you take the levelized energy cost, it's still, with the production tax credits, are very beneficial to customers.
Well, okay, one last question. Can you speak to the competitiveness of our nation using your AEP grid in terms of where to put a factory versus anywhere else in the world?
Yeah, there's no question that that the energy grid that we serve, the large capital investments we make across the board are beneficial not only in terms of reliability to our customers, but in terms of pricing. And the U.S. is in a great position at this point with a myriad of different energy products that are available. And when you take natural gas and where it is today, renewables where it is, where technology is moving, along with our existing resources, that balanced set of resources provides exceptional benefits to our customers. And in fact, should be benefiting to the entire world, particularly as it relates to natural gas.
All right, that's a terrific story. It's not told enough. Thank you so much, Nick Akins. He's the chairman, president, and CEO of American Electric Power. Yes, the stock's down, but you know why. It has to do with the playbook, not with the company. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.